Okay, just a minute. We're just recording. Thank you. So we're just gonna start on our presentation. How do you share the screen on this one? Okay. Okay. Sorry for that. Can you guys see my screen?
Yeah.
Okay. So.
Yes, very clear.
Okay.
PowerPoint.
So, by the way, thanks for Kuya Martin for creating this this front page. It looks really cool. So, for this one, the first part of this is the yeah the basics of the stock market, right? So, what like how like ways to invest, those kind of things, and at the end of this presentations are going to be those graphs, live graphs, and the projections and how to create an account and all those kind of things. So for starters, what is a stock? So stock is all the shares into which ownership of a corporation is divided. The shares are collectively known as a stock. A single share of the stock represents fractional ownership of the corporation in proportion to the total number of shares. Or in simple words, if you buy a stock, you're basically a part owner of that company. So think of this as an ownership rather than an investment when you're investing. For today, we are discussing fundamental investing. So that's basically the idea for this one. And then over on average, the large stock have returned of 10% per year. Usually, this is based on the returns of S&P 500. Usually, those kind of things, ETFs, index funds, and all those kinds. I think you guys are familiar with that. If not, then we can go in deep on that one. So to compare, credit card interest is rated between 9.9 to 19.99%. So if you guys have a credit card, I suggest that you pay off your credit card first instead of investing, because as you can see, it's almost double the amount of investing. So paying your credit card itself is going to be a good deal for you, and you're saving money on that one. And why should you learn about investing? So if you don't learn how to manage your money personally, at some point you will lose it. So there's a saying that goes, when a man with money meets a man with experience, the man with experience lives with the money, and the man with the money lives with experience. So it's very important to learn about the investing on yourself as well, not just on this one. When you are in the business world, it is important to learn about the in and outs of investing and businesses. So this is the importance of investing. So types of investing. There are two types of investing. The first one is passive and the other one is active. Passive investing is a long-term strategy in which the investors buy and hold diversified mixed assets in an effort to match not beat the market. So this is usually if you buy S&P, or if you have a financial advisor that manage your account, those kind of things, or if you want a bank or other financial institution to manage your money, that's passive investment. You just need to give them money and they can invest the money for you. The most common passive investment approach is buying an index fund, which holdings mirror a particular or representative segment of the financial market. So for example, Dow Jones, Berkshire Hathaway, S&P 500, those are the most famous ones. The advantage of passive investing is you can let the financial institutions invest the money for you on a diversified, safe portfolio. This works well for people who have busy careers. So if you guys are busy and don't have time to look at the market every single day or every week, I think this is the best option for you. Be a passive investor instead. You won't need to monitor the market so often. You invest the money and then you give the money monthly to a financial advisor, and they can buy on the market even if it's up or down. It doesn't matter. This is so that they can reduce the effect of market volatility. So it doesn't matter if the market movement is. You can they're gonna buy the stocks for you, or a diversified portfolio basically. The disadvantage of this is institutions often offer their services in exchange for a market management fee. So the management fee is usually taken up front, before they invest your money. So let's just say you have $100. On some instance, they take 10% of that, so $10. So they will invest 90%, and then the 10% is your management fee. So a fraction of that money will be deducted from your investment so that they can pay their financial advisors. And another disadvantage of this is you cannot pick when to buy the stocks because someone is managing it for you. It's harder because there's a middleman. So if the market crashes right away and you wanted to invest, you cannot do it right away because you need to contact your advisor first and all those kind of things. There's going to be a bunch of middle transactions. So the rate of return you get is usually the market return. So if the market earns 8%, you get 8%. If the market gets 12%, then you get 12%. The average market return is 8 to 12%. Normally, it's 10%. So typically, lower returns compared to good retail investors. So if you have more money than time, this is good for you. And then the second one is active investing. This refers to an investment strategy that involves ongoing buying or selling activity by investors. So Tito Fred is doing this. I think Tito Danny is doing this as well. And some people in church I'm not familiar with, but I'm sure some people is doing this. Even some of the youth are active investors. Active investing is the purchase of investment and continuously monitoring the activity to exploit profitable conditions. So if there are opportunity in the market, you watch it every day and then look for the perfect opportunity and then you get in. That's how an active investing is. The advantage of this is you can pick or choose what stocks to invest in, and you can beat the market rate of return if you invest wisely. If you pick the stocks wisely, you can increase your money at a faster rate than the market. So as I said, you probably can gain more than the not normal 8 to 12% investment if you are very good at this one, but you need to learn. You can react to the market quicker and take advantage of the market opportunities immediately since you don't have a middleman. So for example, last year, the market crashed last March last year within 2 weeks. So sometimes you won't be able to contact your financial advisor within those time to invest more of your money and take advantage of that opportunity. So the advantage of being an active investor is you just open your account and then you can invest yourself. So the disadvantage of this one is you can lose money if you invest badly. So on this one, it's usually your fault if you lose the money instead of a financial advisor or financial institution. So that's one downside of it, of this one. More risk, more reward as well. So you will need to learn and research on your own, which might be time consuming for some people. But if you have more time than money, you have time to learn, you have time to watch the market, this one is good for you. Suggestions: if you have extra money and extra time, try to do both and compare. If the financial institution is doing better in percentage of return compared to your portfolio, you should be a passive investor. If your portfolio is doing better than the market though, you should be an active investor. Good indicator of this one is if your portfolio is consistently earning 20% in a year or higher, that means you're a good active investor. Passive investing. So I think Tito Fred is gonna do some of presentation of this one. So I'm just gonna give an introduction. Usually there are things for passive investing that you can invest in outside of the things that I mentioned already. So bonds. Bonds is an instrument of indebtedness of the bond issuer to the holder. The most common type of bonds include municipal bonds or corporate bonds or government bonds as well. Bonds can be in mutual funds or can be in private investing, where a person would give a loan to a company or government. So typically bonds are safer but offers lower returns. So mutual fund is an open-ended professional managed investment fund that pulls money from many investors to purchase securities. So for example, there's a financial institution that invests in mutual funds. So what they'll do is they'll gather money from people and then they will invest that money and then they will invest that money on a diversified portfolio and then distribute the profits to the person who gave money to them, basically in simple terms. So yeah, you cannot choose the stocks that they invest in. They manage that, and then you just get the money if they ever make some profit. Segregated funds is an investment fund that combines the growth potential of a mutual fund with security of a life insurance policy. So I think Tito Fred can expand on this one on his presentation. Over the long term, stocks do better. Since 1926, the large stocks, so this is after the roaring 20s, if you guys remember. So large stocks have returned on average of 10% per year in comparison to long-term government bonds, which have a return of between 5 to 6%. So that's twice or 4%, 4 to 5% more than bonds. Bonds is safer, but stocks are usually more profitable. So market capitalization. So I'm going to discuss this one to learn about risk management as well. So mega cap companies is the companies that are worth $200 billion or more. And these companies are often safer in investment. And it says in here that they provide consistent growth, but not, what do you call this one? It's not, they're not going to provide a lot of return, but in some cases they do. So I'm going to discuss that later in this presentation. So mega cap companies generally have a market value of more than $200 billion and are often the most conservative choice for investors. The mega cap company's large size generally means will provide a low but consistent return investment. Sometimes most of the times this is true, sometimes it's not. Large cap. Large cap is used to describe companies with a market value of roughly $10 billion to $200 billion. Much like mega cap companies, yeah. So the only difference is how big their capitalization is. But how the company works usually is basically the same for large cap and mega cap. So mid-cap companies. Mid-cap generally refers to those companies with a market value between 2 billion and 10 billion. Mid-cap companies offers a balance between the conservative, slow growth of mega-cap and large-cap investments, but are still relatively safe. It is important to research mid-cap companies and look at their past financial history when choosing how much money to invest. So an example of these are cruise lines, airlines, those kind of things. So last March, a lot of those companies lost a lot of their market caps. And as a result, their stock price dropped tremendously. A lot of people made money on those ones because I think right now they're bouncing around 50% of what they lost from their original prices. So there are some risk involved in that as well, but it's very profitable. You can increase your money very quickly with these ones.
Yeah, minor interruption.
Yeah, go ahead.
Kasi baka may nagtanong eh. Can you give a sample of the mega
cap?
Para alam din nila.
Yung mega cap companies. Oh, sorry. So mega cap companies are like the giants, which are the Apple, Amazon, Walmart, Tesla, those kind of things. So you guys are familiar with those, right? So those are tremendously rich companies. Yeah. So, do you guys have any more questions?
Ito ba yung mga nagbibigay ng mga dividend?
Usually some of them give dividends, but some of them don't. Like Tesla, for example, doesn't give dividends, but Microsoft do. Apple do. Those kind of things. So there are some of them that gives dividends and some of them doesn't. It depends on the company.
Can you give an example pala ng large cap? Hindi mo na mention.
Large cap companies are usually the companies are big but not very big. Earlier last year, Tesla was considered as a large cap company because yeah, and then within the year I think they 5x their market cap in a very short period, so they became a large cap right away. Some of the financial banks as well that offer IPO, they are also considered large caps. So most banks.
Thank you.
Okay. So mega cap. Oops.
Yeah, you can continue. Sorry.
No worries. I lost my. Okay, market capitalization, mega cap. Over the long term.
Yeah.
Passive segregated funds. Sorry, I'm just finding my my page right now.
Sa mid-cap ka
Oh,
you can continue with the mid-cap.
okay, mid cap companies. Yeah, so this one's airlines and all those kind of things. So micro cap and small cap companies. So I'm going to discuss the small cap first. Small cap companies have a market value of 300 million, between 300 million and 2 billion. These companies are generally much younger than those in the mid cap and large and mega cap. So a lot of these ones are pharmaceutical companies, marijuana companies, those kind of things. Young tech companies are usually small caps and micro caps. The only difference is basically their market capitalization, but how they work is the same. Small cap and micro cap companies. A lot of these companies usually ends up closing down or in bankruptcy because they're not very stable. But there are it's high risk, high reward when investing in this company. So be very careful when looking at these kind of companies. Make sure that you review them very carefully. You know the in and outs of what they're doing, because as I said, it's very profitable, but sometimes as well it's very dangerous. Some of the young oil exploration companies also fall on this one, small cap and micro cap category. So yeah, high risk, high reward. Yeah, micro cap is between 50 million to 300 million market capitalization. So things to remember. So before starting to invest, there are things to remember. Number one is fear of missing out. Avoid the FOMO, as they said, or avoid fear of missing out. Do not chase opportunities that have already passed. Keep an eye on the next one. So the main problem of some young investors is that when one stock booms, they jump in, and then usually you guys know this one, that after a boom, there's usually a crash afterwards, and they get caught in that one and then lose a lot of money. So try not to chase missed opportunities. So greed can be your biggest enemy or biggest friend when investing. Be greedy in the right moments. Yeah, so when everybody is greedy, act afraid. But when everybody is afraid, act greedy. This is from Warren Buffett. So when everybody is panic selling, buy the stocks. But when everybody is buying, slowly sell your stocks. So that's one of the general rule of the stock market. So yeah, be afraid on the right moments and be greedy on the right moments as well. Try to invest logically and minimize emotional driven decisions. There are also stocks that offer dividends outside of the profit. So this is the question of Tito Cecil a while ago. So what are the stocks that offer dividends? So usually Microsoft, I think Apple, McDonald's, Walmart, Tommy Hilfiger, those kind of companies offer dividends outside of the increase that the company have on the stock price. So that's like extra bonus for them. A lot of investors look for this one. I think Tito Dani is watching for stocks that offer dividends. I usually don't look for dividends when investing. I usually just look at the trends. Yeah, usually stocks with dividends are slower in growth compared to the ones that does not offer dividends. So this is true in most cases, but not all. So active investing is mostly research and waiting. So if you don't like both, try find another way to invest. Research is most important part of stock market investing. So as I said, if you guys are busy on your career, maybe try passive investing or do a what do you call this one? House investing or real estate investing, those kind of things. So because mostly of this ones is a lot of research and a lot of watching the market if you are an active investor. The biggest risk you can take in investing is investing without research. Do your research and be patient in your investing. Always look for long-term trends on the company. Diversifying is one of the way to reduce risk. Do not diversify blindly. Investing in diversified bad portfolio is still bad. Carefully pick the comparison you invest. So for example, on this one, guys, when we just started investing, our first year investing with my friends, we studied about small cap and micro cap companies, and we invested in them. And as a result, we lost some money because, as I said, those stocks are very risky. So when you start investing, I suggest that you guys stick with large cap and mega cap companies for now. Then you can move on to mid cap and small cap in the future. Yeah, so that's the biggest mistake that we've done. There is a 6 to 8 year market reset period, approximately the market research, or have a crash every 7 years. During market crasher, consider the stock as on sale. You buy them as a discounted price and sell them higher later. So you guys know that last year we had a crash last March. And I think this year it's projected that there's going to be another crash. So usually there's like a 6 to 8 years interval between crashes. So back in 2001, there's the dot-com bubble. And then 2008, 2009, there was the housing bubble. And then we had the pandemic last year. So that's why the market crashed. So this is a cycle that happens a lot of times. So be prepared on those times. I'm going to discuss that later. During these times, stronger stocks or richer companies tend to stay in business, while small companies file bankruptcy or downsize. It's suggested to invest in large cap or mega cap companies during these times. Or also you can invest on some index like S&P 500, Dow Jones, or Berkshire Hathaway. There are risks attached in investing in small cap companies during bad times in the market. So I think you guys heard of those companies that filed bankruptcy during the 2020 crash, but you haven't heard of any of the big companies who had that had closed, right? So on those times, I suggest investing in the large cap companies. Investors maintain long. So this is shorting versus long. I'm just gonna touch this one. I'm not gonna go through it a lot of times because this might get complicated. So investors maintain long securities position in expecting that the stock will rise in value in the future. So basically, you're buying a stock so that you think that it will go up in value in the future. A short position is generally the sale of a stock you do not own. Investors who sell short believes that the price of the stock will decrease in value. If the price drops, you can buy the stock at a lower price and make a profit. If the price of the stock rises and you buy it back later at the higher price, you will incur a loss. Short selling is for the experienced investor. So yeah, short selling is only for the, you can still try this one, but I don't suggest it. It's usually for the experienced investors. The easiest way to explain this one is, let's just say Tito Fred has a calculator and I borrowed his calculator. It's cost $100, right? And then that calculator is, there's someone that needs that calculator as well. And I sold his calculator to that person for $100. And then I found the sale at Walmart for $10. And then I returned the new calculator to Tito Fred. So now I have a $90. That's how short selling works. So tips. Try to look for stocks that you can invest in for the long term. Do not day trade. Why you should avoid day trading as a beginner. According to the stock platform Etero, they found out that a whopping 80% of day traders lose money over the course of a year, with a median loss of 36.30%. It's no surprise that 75% of day traders end up quitting within just 2 days. So day trading is when you buy a stock in a day and then sell it within the day as well. It's basically, it's also called scalping. So you get 2% or 5% in a day. So small profits in a day, quick profits, but it's very risky as well because it's very hard to predict how the market moves in a day, but it's easy to predict how the market moves in a year or 5 years. So avoid this one as much as you can as a beginner. And with small, start with a small account as well, with the money that you won't need in the future. More money won't make you smarter. If you cannot double $1,000, you won't be able to double $100,000. If you invested money and the stock price went down, but you don't but you need the money for your bills or expenses, you will be forced to borrow the money or sell the stock at a lower price, which will result to losses. So be sure that you secure your pockets first before you start investing, and use money that you won't need right away. You should maximize your tax-free savings account first before opening a margin account. Profits from TSFA are typically not taxable unless you go beyond the limit. Ask your accountant if you don't know your TSFA maximum contribution. Margin account is a taxable account. The profit in these accounts need to be submitted for your tax calculation. Margin account lets you borrow money for investing, but you will be charged with the borrowing fee. And if the stock price goes down to a certain percent, the broker is allowed to sell your position for them to keep the money that you borrowed, and you will lose your money. So just an advice for everybody, start small and use your TSFA. I think everybody has a 6,000 increase every year on their TSFA um, cap, I think. So be sure to maximize that one for your investment. Try to look for stocks that you can invest in. Oh, no. Went back. Okay. So those are the tips. The power of 72. So I'm going to explain this one. The power of 72 is a compounding interest formula to calculate how many years it would take to double your money. This is where the profit from your previous years are reinvested to the next. The secret is the percentage of annual return of the investment. You should be focused in the increase of your percent return for passive investors. For passive investors, they promise 8 to 12% return. And that is good for people who are busy, who have busy careers and do not have time to watch the market. The challenge for active investors is how to maximize the percent of return without taking in a lot of risk. Try to avoid taking unnecessary risk with very little return or upside. So I'm going to give an example of this one. Example, if a company files a bankruptcy. So one company that filed bankruptcy last year is Hertz. It's the rental car company. And a lot of people jump in on that one thinking that the company's stocks are on sale. But they didn't know that it filed, I think, chapter something bankruptcy. And it was actually downsizing. And a lot of people lost money because of that. So it may seem that the stock is on sale, but in reality, it is because they're about to go out in business. You should avoid investing in this kind of scenarios. But if the company price drops 30% in value because of the market crash or rumors about changing their executive, but their annual profit is still the same, you should buy. These drops in value are usually just temporary and will immediately recover. So example, earlier this year, Amazon announced that Jeff Bezos is stepping down as a CEO, and the price dropped by a bit. So a lot of people took that advantage and bought that one, but the price jumped up right away. So yeah, that's one good way to take advantage of the market. So if there's one thing that happens, because it doesn't matter if Jeff Bezos is leading Amazon or not, because people are using Amazon consistently, it's still gonna go up. Okay, I'm gonna explain the rule of 72. So rule of 72 is to calculate how much time you need to double your money. So T is equal to time, and then 72 is the factor, and then R is the rate of return. So for example, you have you want to calculate your how long will it take for you to double your money if you have an 8% annual of return. So 72 divided by 8 is 9 years to double your money. But if 72 divided by 10, it's going to take you 7.2 years. If it's 12%, 72 divided by 12, it will take you 6 years. So let's work backwards. So let's just say you want to double your money in 2 to 3 years. So let's say you have 72 divided by 3 years, you will need 24% annual interest to double your money in 3 years. If you want to double your money in 2 years, you need 36% annual interest. So that's how the rule of 72 works. So, so by the way, rule of 72 is usually for for passive investors, for those companies that offers fixed rate of returns. Yeah, so that's usually for passive investors. But for active investors, they use a different formula. It's called the doubles game. So for active investors, instead of compounding interest, they think of it as a doubles game. The only focus you should have in a double game is how to double your money. How fast can you double your money? If you have 1,000 and you double it 10 times, you're gonna get $1,000,000. So this is it. The challenge for a lot of active investors is to get from one place. So it doesn't matter if you start with 4,000, 8,000, or 1,000. It's only that how fast can you double your money. So as you guys can see on this one, if you double 1,000 10 times, it's gonna be $1,024,000. So yeah, that's for that one. So ETF. So I'm going to discuss on this one as well. An ETF is a collected of stocks or bonds that may be purchased for one price. Unlike mutual fund, ETFs may be bought and sold during the entire trading day, just like a stock on an exchange. Many popular ETFs track well-known stocks indices like S&P 500 is a stock exchange that is comprised of 500 largest public traded companies by market capitalization. One example of this as well, I think, is Vanguard. Is that right, Tito Fred? I'm not sure if that's one. I haven't invested on that. Is Vanguard one of them?
Yeah. It's
Okay,
one
yeah.
of those. Yeah, this is more advanced topic, but you can proceed.
Okay,
No
yeah.
problem.
So that's one ETF. Yeah, you can invest in those one if you don't want to invest on individual companies. You can pick ETFs, and then they are going to create the portfolio and they will invest for you. But you can the money is still liquid. You can take out your money if you need them. The S&P 500 has been up 91% since the market crash in March. That is almost double in just little over a year. The advantage of active investing is you can take advantage of these opportunities. So yeah, 91%. So from March to April this year, it's 91% increase. So that's almost double in less than a year. That's way more than the 12% that is usually offered on the passive investing. If you invested $2,000 worth in this ETF last March, so it's going to be $2,000 times 1.91, you will have $38,200 today. So yeah, that's a huge profit, and half of that profit is not taxable. So capital gains in Canada, 50% taxable. Dow Jones is another one, but I'm not going to go through Dow Jones because it's very expensive. It's 34,000 USD per share. Yeah, but the S&P 500, the SPY ETF is only $400 something. So it's way more affordable than Dow Jones. But they have the same trends I'm going to show you later. Opportunity is best when there is a market crash. Investors love market crashes because there's a lot of stocks on sale, as I told you before. There are a lot of large companies that go down in value just because people are selling the stock. The misconception that costs new investors a lot of money is that they sell when the market is going down. So this is called panic selling, and buying when the market is going up. It should be the other way around. Buy when it is low and sell when it is high. So yeah. Or you can invest also. So instead of if you don't want investing in ETFs, you can also invest in individual stocks. You can create your own portfolio by picking and investing on individual stocks that you think will increase in value for a long run. So I made a mock-up portfolio so you guys can see my screen, right? So Apple, Amazon, Tesla, Google, Facebook, and Microsoft. So today, the price per share for Apple is 134.94 US dollars. 5 years ago it is only $26.42. That's 5.1 times in 5 years. For Amazon, $3,372 to from 5 years ago, it's only cost $620. That's also 5 times. Tesla is only $50.75 5 years ago. Now it's $714.63. Tito Fred and I actually bought Tesla stocks and then sold it a couple of months ago. So we sold it around $800. It's dropping now. So yeah. So for Tesla, within the 5 years, they're 14 times their money. So if you invested in Tesla 5 years ago, that's 14 times for you. So it's a huge return on that one. Google is 2,289. And then 5 years ago, it was 737. Facebook is today $302. 5 years ago, it was only $110. Microsoft, 258.72 today, and then only $51 5 years ago. So this is how you can be an active investor. So you can create your own portfolio, pick the stocks that you think are going to increase in value instead of investing and having like a 12% return. So if you look at this one, they have an average return of around 4 to 5 times. So 4 to 500% return within 5 years. So yeah, taking advantage of market crashes and how to prepare. Always keep cash in your hand. Have a liquid money when the market is unstable. Listen to the news, but do not buy the news. When the news says the market is going to crash, it often will take a few months or a year for it to happen. You will have time to prepare and research. When people start panic selling, start buying in increments. Secure your money. Save some money for the expenses during the crash and set aside money for investing. What to look for when buying a stock. So this is usually what I do when I buy a stock. This is during market crash. There are also what do you call this one? Factors that affect this one. But for these purposes, I'm only gonna discuss the fundamentals of it. I'm not gonna discuss the analytical part of it. So look for trends in companies' earning growth. Over time, do the earnings generally increase? If so, it's a pretty good indication that the company is doing something right. Every small, regular improvement over a long period can be a positive indicator. Companies have earnings report every quarter that you can access online. So you can review if the company is losing money or gaining some money by reviewing that quarterly report. All companies carry debt, even Amazon, Apple. Investor can use debt as an indicator of the company's financial well-being. Watch out for companies with high debt levels relative to their equity. So yeah, so if the company has a lot of debt, I suggest that you don't invest on it. So I'm not gonna discuss this the calculation part of it, but yeah. So the company should have enough liquid cash. So just in case the company faces a lawsuit or like let's just say the pandemic happened, it's a good thing if the company has a liquid cash in order to sustain their workload and not be forced to downsize or file bankruptcy. A lot of the airlines last year filed bankruptcy because of the event that happened with COVID-19. So some of them really closed, some of them recovered, but yeah, it's a risk that that companies that doesn't have liquid cash faces. The stock trend should have an overall uptrend direction. So yeah. So if you look at the stock graph itself, you can actually judge the company if they're doing good or not. So, yeah, if the graph is going up, that's usually a good thing. The reward should outweigh the risk. If the company have a bad reputation of performing badly or producing bad products, then even if the stock price is going up, this is not a good investment. So just be careful on that one as well. Research on the company of what they're doing. How does the company compare to its competitors? Does it stand out among others? So with those things that I share about you later with the companies like Apple, Amazon, Tesla, Google, you are familiar with those companies, right? So usually those companies do better because for new investors, they usually look for the companies that have familiarity to them. They don't have time to research for the startup companies. So these companies usually do better. So if they're famous and they stand out among their competitors, they're usually gonna be up for the future. When the market or stock price is dropping, buy in sets. Do not use all your money in a single buy. Buy in sets as it goes down. So yeah, for example, a stock drops 10%, don't use all your money to buy the stock, even if you are confident that's gonna go up, because it might still go down more. So let's just say you have $1,000. Probably use 25% of that to buy the first 10% drop, and then for another 10% drop, use the other 25%. So you get the idea. Research the company to make sure that they have enough money to reach. So yeah, I've already discussed that. Deep buying is another one. So deep buying, even when a company is uptrend overall, there are usually occasional dips in prices. So as I discussed in Amazon, they dipped because Jeff Bezos stepped down as their CEO. So that's a dip buying opportunity. So consider those as sales season. Buy stocks during those times. Momentum buying. So this one is also another way to buy. This is actually what I did for Tesla. So momentum buying, buy when the stock is surging in price. This will usually be followed by a hard crash. When using this strategy, you should be ready to sell your position when signs of a crash is showing. So I think Tito Fred got out very nicely on this one as well. We bought Tesla when it was lower, and then there were signs of it crashing, so we sold our positions at a nice profit. So this is going to be last. I'm just gonna show the graphs first. So compound interest, by the way. So this is how compound interest works. So let's just say you found a financial institution to manage your portfolio, right? So let's just say your first investment is $5,000, and then monthly you put at $150 monthly, and the rate of return is 8% for yearly increments, and let's just say 20 years. How much would your money be in 20 years? So 5,000, you contribute 150 monthly, 8% of return. So in 5 years, you will have $108,654.65. That's how money you will have after 20 years. But let's just say instead of 8%, you have this at 12%. Let's see the difference. So that's 108,000. Say for in comparison, if you have 12%, then you calculate this one, you have 184. So it's way more money compared to the first one. So be very watchful on this one, because it doesn't matter if you're even if you're investing the same amount of money, if the interest of return offered by the financial company is lower, it's gonna be lower for you as well within the span of 20 years. Yeah, that's one way for that. So I'm gonna show the graphs. So for this one, so as I said, I discussed a while ago Apple companies. So this is what the Apple company looks like over the last 5 years. No, not Apple company. Last 5 years. You guys can see the graph, right? So this is what happens. So looking at this graph, you notice that it's increasing in price over the times. These are called the dips. So you see this drops in prices. Those are opportunities for you to buy. So this one, it also dipped this year. So take advantage of those opportunities because those are considered free money. So usually most of the mega cap or large cap companies have the same trends overall. This is Facebook as well. So they have buying opportunities back in 2019. Last year, there was also a buying opportunity, but now it's way up. The other one is, the most famous one is, I think this one, S&P 500. So this is what I showed before. We were talking about this with Tito Fred yesterday. So if you measure during the market crash and today, that's 91% return. So if you took advantage of that opportunity, you would have almost doubled your money in just over a year. So yeah, and then we're gonna go on creating the accounts. Just let me know what if you want me to look at the different stock. But Questrade account. So yeah, so it's important to create your own account on this one because as I said, even if we show you all of these ones, the slides and everything, we can teach you through paper. I think experience is still the best teacher. So doing it yourself will make you more familiar with the market and how the market moves. Remember to start small and invest logically. So I have this link in here. I think we will email you this file as well at the end of this presentation. So yeah, Questrade. So just an introduction of Questrade. So it's I think it's the most famous broker account in Canada. So once you're done creating your account, you can download an app on your phone and access your investment through your phone. Questrade charge $4.95 per trade. Let's say you have bought 10 shares of Facebook at $300 per share. At $300 per share, you will be charged $300 times 10 shares plus $4.95. So that's $3,000 for $3,004.95. So and then you will be charged another $4.95 when you sell your shares. So I'm gonna discuss on how to open an account. So I actually found a link that is good for this one.
This one minor question.
Yeah.
Translate
Go
so
ahead.
that this is for the audience.
Yeah.
So that in most trading platform, we call it platform. So
Yeah.
Questrade is one of them. They're in fact the top trading platform in Canada.
Yes.
And very reliable and kind of stable. So I think they made it for many years now. So
Yeah.
every time you trade,
Yeah.
that
Lina, can you hold him? Come on.
regardless of the amount of money or
I just need to get something from my car.
the amount of value of the
Sorry,
trade.
Kuya. Sorry po. Translate, can you mute Alicia? Sorry. Sorry. Yeah, thank you.
Wait lang po, Tita Fred.
Sorry. Yeah, the simple question is regardless of the amount of money you're trading, it's the same amount of charge that they're imposing, isn't it?
Usually it's in some cases, in most cases, yes. There are some also that offers, I think, 1 cent per share, but that usually just works on penny stocks.
Yeah.
But on other ones, it's $4.95 per transaction.
Yeah.
But there is also Wealth Simple, which I haven't tried yet. Some of the youth are using it. They said that they don't charge any trading fees. I'm gonna try to create an account so I can have an opinion about it.
Yeah, that's what I heard from them, but
Yeah.
that's okay. Thank you.
Yeah. So yeah, that's an extra money, but yeah, that you need to pay when creating a transaction for them. And then yeah, so the step by step on how to create an account. So I found this this link as well. So if you're creating an account, use the TSFA for now. Try to maximize your TSFA first before creating the margin account. So this is how you create an account. So do you want me to discuss this, or can I just send this link for some people? What do you guys think? Do you want me to?
Yes, so that people who doesn't have any idea, they have already like ideas how to do that.
Okay, yeah, I'm gonna send this link, but I'm gonna browse it. You can follow the steps on your own. Wait, I think I lost it. I think I lost it.
What?
Just give me a second. The link. Okay. That's it. Just give me a second. I think I lost the. No. No. So I'm gonna send you this one as well. So you guys can follow this one. I'm just gonna run through it. So first step, take the TSFA. Second step, create a user ID. So you can use your name or user ID on this one, and then press continue. I'm not sure who has this offer code, but this is the one I found in the internet. You can use that or you can ignore it. So it's gonna ask for your personal information. So first name, last name, your email and phone number, and then you press continue. And then the same thing, create your password, ID. And then once you finish that one, so there's gonna be a few questions on here, security questions that you need to ask. So if you log into another computer, they will know it's you. Number 3, filing out personal information. So on this one, you need to, most of them is employment and banking information. So personal information, first name, middle name, last name, phone numbers, email address, date of birth, those kind of things, marital status. It's gonna ask if you are a resident of Canada or you are a citizen in here. It's gonna ask for your address as well. And then number 2, it's gonna ask for your employment. If you're a student, you can say student in there as well. It's gonna ask you for your main source of income. Sometimes you can put student loan in there, or sometimes you can also pick, if you have a part-time job, you can specify that as well. Or if you have your own business, that's one thing as well. And then it's gonna ask a bunch of questions. And then financial, so it's gonna ask for your banking information. I suggest that when you're using this one, because if you're using it on your computer, please use incognito, because you might have a virus and someone might steal your financial information. So just be careful on that one. Use a safe computer. And then citizenship, it's gonna ask for your citizenship. So if you are a citizen, just say, and then if you're born in US or not, it's gonna ask for your social insurance number. And then step number 4 is your Questrade account. So it's gonna give you your account, and then you can set up your account through this one. So you need to answer a few questions: account details, consent of communication, persons with financial interest. So go through those ones one by one, and please also read all the agreements on this one. Account details. So do you want to trade options? Usually you can put it in there as yes if you want. I don't use options, but you can trade options.
Sorry, your screen doesn't show what you say. We were stuck here step by step how to sign.
Oh, okay. I can send this link po afterward.
Okay, thank you. Yeah, thank you.
Yeah. Retirement, education, savings. Yeah, so it's this one. So, and then it's gonna ask you how much money you will be depositing for. What will your initial deposit be for this account? So I think you can have a minimum deposit of $1,000. So as I said, you can start small. The first challenge on that one is try to double that $1,000. Once you double that one, it's gonna be easier for the next one. So you can add money after that. A green check mark will indicate that you have correctly filled out the account details section. You can now move on and consent the communication section by clicking the start button. So it's this one. So start, consent and communications. So just press that and then something will pop up. Consent and communications. So read all through these things before you give your consent. Read about them very carefully. I want to see, so all those things, if you want to communicate in English and French, I think most of us prefer English. And then, yeah. And then after that, you can go to the next one, which is persons with financial interest. So it's going to guide you through this one. So it's an easy way to create your account. It's step by steps. It's going to show you. And if you don't know as well, you can you can call the Questrades and they can assist you finish your account. So yeah, just read through this one. It's a bunch of basically things and interview questions from them. Agreements. So this one, agreements, read this very carefully. Don't just accept the agreements. This is financial informations. So please read them very carefully. Sign in and submit your document. Click the box. Agreements. Yeah. Check the agreements. And then sign and submit your document. So yeah, it's an easy way to do it. You can e-sign on this one as well. Fund your account, minimum of 1,000. Yeah, so as I said, you can start with $1,000 only. So that's not that's not a lot, but just try to double it first before you go all out on investing, just to make sure that you are comfortable on doing it. And then yeah, you can upload your government ID issue. It's gonna ask you for all those things. Yeah, you can use your driver's license, passports, those kind of things on that one. And then next step, yeah, upload the file to Questrade. So it's going to instruct you step by step on how to do it so that you don't have to find. Yeah, so these are the steps on uploading the documents. It's going to ask for your banking information as well. So be ready on that one. Direct deposit. Answer questions, sign documents. So this one as well. Yeah. So yeah, this is straightforward. Fund your account. So once you put your initial deposit, and let's just say you're comfortable in investing and you want to put more money, you can connect your bank to your Questrade account. It depends on the amount of money it will take for your money to be accessible in your account. I think for $1,000, it's gonna take 1 to 2 business days, I think. But if you're putting money more than $10,000, it's gonna take a week for your money to be deposited in your Questrade account. Yeah, financial institution. So it's gonna ask for all those information. Yeah. And yeah, Questrade. It's all those things. So sign up to Questrade to complete. So yeah. So that's it for creating an account. So once that happens, you can start buying and investing on that one. One tip on this one though is when you're creating an account, you can partly create your account if you're busy and then continue it the next day. You can do that, or you can do it in one sitting. If you don't still follow this one, there's also YouTube videos. If you go to YouTube, they're gonna tell you how to create a Questrade account. This one is a step-by-step process, so you can also follow this one. But just in case you get lost, you can call the Questrade. You can go to the Questrade website and then call their number, and they're gonna assist you create your account. So that's it for the presentation. Do you guys have any question about the investments?
I think there's a lot of questions.
Yeah.
Fransley, we don't have time for this, but maybe you want to just discuss them. There are two basic accounts when you create. I'm not using much on Questrade, but I'm in Qtrade is the second top Canadian trading platform. So they have margin account and cash account.
Yeah, margin account, cash account, or there's also the TSFA account. Yeah.
TFSA and RRSP, but
yeah,
for the purpose of like the basic ones, you mentioned about margin account where you can borrow money if you don't have any cash inside, but that can only happen after you have funded your account.
Yeah. So for that one, you need a certain amount, and then the money that they will let you borrow will be based on that amount as well. I think. Correct me if that's correct, Tito Fred. I haven't used margin account. To be honest, I've been using TSFA. But for margin account, if I think it depends on the market cap as well. You can borrow up to 50%. Is that
Yeah,
50%?
correct.
So if you
Yeah.
have let's just say $3,000 in that account, how much money can you use with margin?
You can borrow 1,500.
Mhm.
That is half of that 3,000. As long as you have, actually, the 3,000 is not the actual cash value in your account. It's the value of your stocks, the total value. So you can borrow 1,500 in cash to
Mhm.
buy another type of stocks.
Okay.
But there's a 1 week kind of 1 week or 2 weeks period where you need to repay it back by transferring money from your bank account to your trading platform.
And they're gonna charge you a borrowing fee within that period.
Yeah.
Okay. Yes. So I think Tito Fred, you can add that on your next one. You're more familiar with margin accounts. You've used it before. Yeah. So, but I suggest for beginners, stick with cash or TSFA for now. Try to maximize those ones, and then if it's maxed out, I think some of the people in here have 60,000 max limit. Some of them has less, some of them has more. But try to maximize those ones first before you move to your other accounts.
Yeah, I think there's a question by Elisha. Yeah, Elisha. In the chat translate.
Okay.
Anyway, so while Francis is checking for the question, just to add, because I'm using the Qtrade as well, out of trading platform, they also charge a quarterly if you are not an active trader. So they usually give you like, you need to at least have a trade. Let's say they will require you like 17 trades in a month. And if you didn't meet that, they will charge you quarterly. The trading platform usually charge that. For Qtrade, I think they charge quarterly. I think they charge $34. If you didn't meet the minimum requirement of the numbers of trade that you have to do on a quarterly basis. I don't know about this this trading platform that Franz presented. I don't know if they have a quarterly charges as well, but a lot of trading platforms do. So that's why if for new investor, it will, if you don't meet that minimum trading, they will charge you quarterly as well.
Yeah, but for that one as well, I think don't be pressured to trade just because they will charge you. You might lose money trading instead of just holding your investment. I think there are also times that you need to sell your stock if you think that the stock is gonna drop again soon, and you can rebuy your stock. That's the time that you will trade. But if you trade daily, it's very risky. So some of the trading platform, as Tita Cecil said, they charge money, but I'm not sure for Questrade. I haven't been charged with those ones. I only
that's true. I'm just saying, like, you need to make sure that you have a little bit more there, because I'm sure we're not, for some.
Oh yeah, you're right.
Just going to start, you're not gonna trade in that much, right? But you have to expect that there will be some additional charges, and for those large that you presented, actually option trading is another option for that. Like, let's say for Amazon, how much is their stocks? Like 1,200, right? If you don't have that, you can do an option trading to that.
Yes.
And another way for you to,
Yeah, I can teach option trading because option trading is more of analytical investing. So that's another discussion. We can expand on that one if you guys want.
Yeah, option trading is very interesting because it's less risk.
Yeah.
Because you don't have to put off the
full amount.
For you to buy one stock will cost you 1,300, right?
Yes.
But no, it's a hot stock. So what happened with the option trading? If you don't have that money, so you will do the option there. It's the difference that you are trying to buy.
Yes.
So that's a really good lesson too for that.
I'm gonna expand on that one if you guys want. I can discuss option trading as well. Yeah. Okay, I'm gonna answer. When do you know which stock to invest in, how long to keep your money in, and how to recognize when to take out? So this is a very good question, Isha. So this depends on each stock as well. So I discussed this a while ago. So when looking for a stock, look for the trends of the stock. I think I have it in this one. How do you hide this? I think I have a slide on here saying.
Kuya, your screen is frozen on the website that you were talking about.
Oh, okay.
Yeah, the screen has been frozen for a while.
Oh,
So I advise them, whatever, all the things that you explained, translated, they probably didn't got it on the screen. So they just go to the website and then follow the procedure for.
yeah.
For the account, creating of account.
Yeah, I'll share this document as well, so you can read it.
Yeah.
So this one, Asia, what to look for stock. So there are things in here as well. So there are factors to consider, what stocks to buy. So you can read through this one, and then we can also discuss it during the youth meeting. So I've discussed this a while ago. So look for the trends. Check if the stocks have cash. Look if the stocks are producing good products or not. How do they stand on their against their competitors? Those kind of things. And when to sell, that depends on you, on your thing, because usually depends on the stock. We can go through those by one, but every stock is different. So it depends on the trend. Like for example, on Tesla, it was overinflated a few months ago, so we sold the Tesla, and now it's dropping in price because there were indicators to predict that the market will crash or the stock will crash. Does that answer your question?
Yes, thank you. I'll just read through the.
Yeah, we can discuss this any like further. Anything else?
We have
Also, will you be going through Bitcoin?
Sorry, who's talking?
Oh, it's me,
okay.
Alicia. I was asking if at some point are you gonna go through Bitcoin as well, or is that something
Tito
separate?
Fred is gonna go through it, so I'm also excited for that one. Is that next week, Tito?
Yeah, that one is blockchain technologies, so cryptocurrency.
Yeah,
that will be for the next session, not for this one. So it's a completely different topic.
Okay. Just to add, I know we are almost close to 9, but for me, I started. Some people don't recommend it, right? But I do started on the penny stocks actually.
Yeah.
So it's very risk. So investing is for the amount that you are afford to lose actually.
Yes.
So especially if you are starting this type of investment, make sure you only allocate the money that you can afford to lose, and you can sleep on it, right?
Yeah.
Let's say you're okay just in case, because investment is a risk. Just to let you know,
Yeah.
The church is providing the educational information only, right? But we are not endorsing. Because just to let you know, especially stock market and Bitcoin, it's kind of the same. They function the same. They're like brothers and sisters, right? But just to let you know, if you are interested, you only invest the money that you can afford to lose, and you can sleep on it. Like, it won't bother you. Let's say if you lose $500, right? For me, just to let you know, I started on the penny stocks actually. So it's very, very risk actually, right? So, and you really need to because penny stocks, like what Franz Lai said, you know, that company can go the next day or like a month after. We don't know, right?
Yeah.
But the return of investment in penny stocks is very high.
Yes.
Depends actually. So that's how I started mine. I started with $500, right?
Mhm.
So for those who are interested, because you can play with it, because a lot of stock now, you know, sometimes they are very expensive. Like one stock will cost you $300, right?
Yes.
And if you buy, they will charge you for the trading right away, like sometimes $30, right?
Mhm.
So for me, I started with the penny stock, but it depends. People who would like to try to try this one, I don't recommend that you put in big money right away. Like money that you can afford to lose is what I'm suggesting for stock market as a beginner. Anyway, that's my 2 cents there.
Yeah. That's very actually a very good advice. So as she said, with the penny stocks, a lot of people make a lot of money on those ones because some stocks doubles in a day or triples in a day. Tita Cecil, are you a day trader?
I was, but I got
Yeah.
busy, so I didn't. I lost a lot. I'm saying because I do day trading.
Yeah.
I lost a lot of money here. So that's why I said
Yeah.
make make sure that you really watch your investment.
Yeah. So that's the thing as
I'm
well. 'Cause-
saying it's generating again because the money that you're saying the money is because it is still there, right? But you know how the stocks up and down. But I'm attracted more on
penny
the
stock.
penny stocks actually. That's
Okay.
what I do. I don't buy those large cap, and that's why I'm not too familiar with that. I don't invest in that.
So yeah, so for our experience before, as I said, I think this was 3 years ago, more than 3 years ago. Me and my friends also started day trading, and we put up a little bit of money. We started with just a little bit over $1,000, and we lost that money, but we made it so much during the fundamental investing. So it depends, I think, on your risk tolerance. So if you guys are way more interested in high risk, high reward, I think penny stock is good, but if you want consistent profits, but not as big of a return, I guess you can stay with large cap and mega caps. I think that's one take away from this point.
Yeah, actually, the penny stock very give you like the high reward. Like
Yes.
I experienced before, like for my 600 investment that it make me 1,500 in 2 days, right?
Yeah.
Something like that.
Yes.
So, but it's very risky is what I'm trying to say.
Yeah. It can double in a day or half in a day. So that's the thing. But yeah. Anything else? I know I'm missing some of these ones because I only added the fundamentals of it. So if you guys have any question, feel free to ask.
Translate.
Apa?
Like as example, I want to do stocks, but I really don't have lots of time to, like what you have said, we have to watch our crops, right?
Uh-huh.
So what could you suggest, like for us who could not do a lot of looking and that time,
Uh-huh.
but we want to start something like that?
Opo. For this one, so as I said a while ago, passive investing might be a better option for you because, as I said, like for busy investors, I suggest passive investing in financial institutions. So there are some financial institutions, I'm not very familiar with them, but I think you are working in one, Tita. Yeah, so those kind of things are very good as
Yeah.
well. So for careers that are very busy, I suggest doing that because as yeah, I think Tita Cecil experienced this one as well. If you're very busy and you're day trading, it's very hard on you because you're working and you're also watching the market. It's hard to focus. But if you're very busy, just do those passive investments. Those have good returns as well. It is lower and safer.
Thank you, our
Yeah.
Translate.
Anything else?
A lot of experience too as well. So maybe, we would like to hear from him. Kuya Danny,
Yeah.
will you like to share something?
Hello, ako I want to suggest if you want to start, you need to select what's your interest. Like myself, I'm working in oil and gas. So I focus on oil and gas stocks because I'm interested reading about what's happening in the oil and gas industry. So, and also I'm working in an oil and gas company. So I know what's happening inside the company, what the development. So I put money on my stock that I have confidence that it will stay longer. So if you're interested in financial, so go to the bank. My suggestion is that select one or two banks, okay, watch it, how the behavior of the stock, say in a month before you do trading, check how the news, what are the news that triggers them to go up and go down. So at least a quarter, as what Franslai said, every quarter, all stock give their report on how the behavior in a certain quarter. So if you want to start, I think that's a good deal because you're interested, you read the news about certain technology or certain like Tesla or banks, financial, marijuana. I don't like you to go there because sometimes it's I think marijuana are one of the popular stocks because of the Trudeau legalization. So that's my suggestion. So I have two platforms. I didn't use Questrade or Qtrade because it depends on the risk level of the person.
Yes.
For me, I want to see that I put my investment in a reliable company that I can go in any branch and talk to them what's happened to my account. Questrade has been in the industry for a long time, but if something happened, you don't know where to go. You need to call them, or there's no, I don't know if there's an office of Questrade where you can stop by and give complaint. Frontline, do you know about it?
No, but they only insure up to $100,000 of your investment, I think. So on the other hand, I also did RBC direct investing. So I think that's what you're telling. You want to invest.
Yeah, I think if you want to invest, go to the bank for the time being.
Yeah.
If you open an account like what they said, TFSA, RRSP, or non-registered account,
yes,
the bank will give you a practice account. So you can do practice as well before you put money on your real investment.
Yeah, that's really smart.
So that's my suggestion for the people who wants to start investing. Check your risk level, and as Franslai said, if you want to try investing, make sure the money that you're going to use in this investment, you don't need it for at least 6 to 1 year.
Yes.
Because if something happened, you can still wait because you know the ups and downs of the market. It will go back and it will, you might regain the losses in case, or you might gain more money instead. So that's my suggestion as I'm a stock trader as well. So that's my suggestion.
Okay, that's a very good point. Anybody else? Anyone has a point on this one? Or any questions?
Okay, last na to.
Okay, go.
So this one is a generic kind of factors that will affect the stock market.
Yes.
Look at the news almost every day.
Yes.
If you're doing even long-term trading or short-term trading, sorry, they call it trading is short-term.
Yes.
Stock market activity, but long-term is what we call investment. So there's a difference between investment and trading. So if you put your money for a long-term, we call it investment. So the thing is that look at the news. the thing that influences your stock, the stock price, is the political condition, economic, as well as the company status. So that's kind of a daily monitoring that you need to do. That's what I.
Sometimes as well, in addition to that, as what Tito Fred says, sometimes as simple as a tweet from someone can affect the stock market.
Mhm.
So for example, Donald Trump, if Donald Trump tweets about something, it affects the stock market. And same thing, I think, with Elon Musk, Tito Fred. He tweeted about Bitcoin a few months
Yeah.
ago, correct?
Social, yeah.
Yeah, which surged the price for Bitcoin from 30 something thousand to 60,000 US dollars, right?
Mhm.
So yeah, so be watchful of those news as well. Yeah, watch the news every day, as Tito said. Yeah, research is very important.
Yeah, you need to be updated with what's happening in the market, in the country, economy, before you go to the real stock trading.
Mhm.
I think not only in Canada, but also outside Canada. Like what I'm doing, I'm trading oil and gas. So I need to know what's happening in Saudi Arabia
Oh yeah.
because they are the oil producer and they dictate the price of oil.
Mhm. Okay. Okay. Any more questions? Are we good?
Yeah, thank you, Franz Lai. Very, very informative. So next week we are going to have the
Blockchain.
the Bitcoin. So I did talk to Fred.
Yeah, I don't necessarily have to put it as Bitcoin. It's a generic cryptocurrency,
Oh
but
yeah,
the term I use is
cryptocurrency.
blockchain technology. So
Yeah, blockchain. Yeah, so that's the presentation we're going to have next week.
Mhm. I'm really interested on that one as well because I haven't tried investing in cryptocurrency, so I'm really interested in learning on that. So for everybody who's interested in investing, I suggest everybody to watch that as well next week.
Mhm.
So
I did actually started the account for this one. It's very, very interesting.
okay.
Yeah, because actually the trading, because there's no, like the trading platform that we have for the stock, Bitcoin behave differently, right? Like
Yeah.
if you don't really do your proper security, your Bitcoin will be gone in a, just like that. That's why we would like to hear it from Fred, because I did started the account and I'm in the security now because it's behaved like stock. You also need a trading platform to do, but a different one. But anyway, it's very interesting. So for those, these are just the taste of what are the possible investment that some people might that doesn't want to invest in stock market, right?
Yes.
Some people are not interested in Bitcoin. It's not for them, right? But some people like to invest in like what presented, like those RIP or mutual funds or real estate. That's why we are trying to present like the whole type of investment, because some people are not interested in what Franz Lai presented today because it's very complicated, right? Especially Bitcoin. Once you hear it, more complicated than stocks. But anyway, that's why we are introducing, because some people, one of you might be interested in doing stocks, right? Like to start. And then one of you might be interested in doing what Fred will be presenting, which is the cryptocurrency or something. But anyway, yeah. So some people, I'm sure, a lot of you might not be able to understand what Franz Lai presented, because
It's a
very
bit complicated.
Cecil. But this is a very good I just want to commend Franz Lai for this one. This is a very good activity for us actually, or one way to learn and to really invest, because especially if the kids are here, uh, because I congratulate you, Franz Lai, young as you are already interested in the growth, financial, spiritual, and emotional, as well as relational. That is very, very, very good thing, that you try to emulate. And if the youth can see that, then they can go even further. Now,
Mhm.
for us, mommy and daddy, this is, I think, a very good thing to think about also, that mostly we consume our budgeting in buying basic needs, which is very important. However, sometimes even we have big income, we still spend it and we still buy a lot of food. you know I remember a long time ago when I and Lorraine started the idea of budgeting. We earn a lot of money and we just keep buying a lot. And then there was a time that maybe time is tough. We still we still manage. So if it's possible to manage when it's tough time,
Mhm.
then why not just live a frugal life and use the excess? Just use not even the excess. Priority is to save first. That this is actually a mentality that we have to put, and we have to live, uh, try to live and share it to our children, that the rich people are actually saving before spending. Regular people or poor people will save after spending. So most often than not, there's no saving that will happen because they spend it already.
Mhm.
So I think this is a very, very powerful way that we can learn. Maybe it's not for all of us because we don't have lots of time here and there,
Yes.
but at least there is an idea that there is something like that.
Mm.
If young people can see this, and if one of us, mommy and daddy, will try, even maybe passive saving, maybe, I don't know. I'm actually trying to read a lot of this, though I did not act it out because I'm a little bit busy with other things that I do. But maybe if kids will see us doing this one, then they will realize that there is something that we can do.
Yeah.
And then time will come, the dream that we want, the breakthrough, the uh, just like what the vision of Pastora, there will be, in actualization.
Mhm. Yeah. Thank you, Tita.
Thank you, Franz Lai. It's an inspiration.
So yeah, so for those who are interested in going through that, if you guys want to sit down, because like with these presentations, there are a lot of things in here. So if you want to get specific, you guys can talk to me in church as well. So yeah, or you can message me privately as well. Thank you, Tita Fred, as well. Thank you, Tito Danny, and Tita Marife, and
It's amazing, Franz Lai.
yeah,
That's very
Tita
good.
Cecil.
Yeah, my children are looking forward actually. Alicia's been texting me. She said especially with Kuya, Kuya Dan. I didn't know that Alicia's reading about Bitcoin and currency trading.
Mhm. Yeah,
So
I'm
that's
interested in
it
that as
means
well.
she's being influenced.
Yeah,
Because she just texted me that I've been reading about Bitcoin and currency trading and things like that.
nice.
So if all of us, if it starts with adult, then the youth will be affected on it, and then they will not just go by here and there. Because for the youth, mostly if they have $100, they will spend $90
Yeah. I was
for
like that as
coffee,
well.
for here, for that, and then at the end of the month, where is
$10.
where is saving? No, nothing.
I was the same.
So yeah. Mom.
Yeah.
Anyway, yes, thank you. Thank you. Very good discussion. So
Um,
hopefully a lot of us here have another thing in mind to think about. As I was saying, some people might be interested because we are presenting a different types of investment.
mhm.
So for some of you who has other types of investment, how to generate income, we would like to hear it from you as well.
Mhm.
Let's say for some people who has some knowledge on making money through right now, like the internet, right? So much going on there. So we would like to hear it from you because the goal of the Shekinah is to share, because this is a breakthrough church and number one anointing of this church is finances. And it just happened that our pastor also teaching about the finances. So it coincides with the teaching and the actual application. So anyway, we would like to thank you once again, Franz Lai. Kudos to you. It's very good presentation. So we're looking forward for Fred next week, Monday at 7:30 again. Thanks, everyone.
Thank you po.
Thank you. God bless.
Bye-bye.
Oh, have a good night.
Salamat.
Thank you.
Ang ganda yung
Amo.
Share the screen. And go.
Okay, gura ka mo pa inyan bukang pene record. Kita record kasano. Ang pa mo pa yan, guys.